So hi, welcome to the first Validus video podcast. Today we're discussing alternative data in SME lending. Is it just a fad or is it the future? We have with us today our Chief Data Officer Sonal, as well as our Head of Investor Relations and Corporate Development, Milena, to share their insights and views on the topic. So let's kick this off with a quick introduction from both our panelists today. Sonal, could you share with us who you are and what you do?
I lead the data and analytics function at Validus across the Validus markets, Singapore, Vietnam, and Indonesia. And I'm responsible for all the end-to-end data and analytics management across the life cycle of our SME loans.
Cool. Milena, so what is it that you do at Validus, and could you share a bit of background as well on who Validus is and what we do?
Sure. So I head investor relations and corporate development for Validus. So on the corporate development side, I manage equity shareholder relationships, any M&A or capital raising activity for Validus. And on the IR side, I manage relationships with investors who lend on the Validus platform. And just to give a little bit of background on Validus, we're a peer-to-SME lending platform exclusively working with accredited investors and institutions on the lending side and SMEs on the borrower side, where we provide unsecured loans to the SMEs. We've been around for about 5 years now, since 2015. And while we weren't the first in the market, we've quickly established ourselves, becoming one of the largest players in the region, where we're licensed by the MAS in Singapore, and we have presence in Vietnam, Indonesia, and soon to be Thailand. I think what really differentiates us is both the experiences that our senior management team brings to the table, as well as some of our shareholders and strategic partners. But our strategy in each country that we operate in is to really build a robust credit and data model, which allows us to offer programmatic lending, where we partner with a lot of corporates across the region to finance their supply chains using alternative data.
Thanks, Milena. So to provide some context to SME lending, let's start with this question. How is investing in SME private credit different through P2P lending? Milena?
Sure. So I think with P2P lending, the barrier to entry is really lower on both sides of the picture, both for the SME and the lender. For the SMEs, the fact that we're underwriting them on the basis of alternative data allows us to offer financing to borrowers who might be unbanked or underbanked, where some of the incumbent financial institutions might not be able to service them otherwise. We also often work with SMEs who are in the services sector, so they might not have the collateral that would allow them to receive traditional bank financing. And on the investor side of things, I think the fact that our data-driven process allows us to do in-house credit assessment creates a situation where the investor doesn't have to do so much in-depth due diligence themselves. And so it requires a lot less hands-on involvement from the investor and shortens the time horizon for them to be able to make an investment in an SME. And I think on top of that, it's very convenient for an investor once they've actually funded the SME, because they can set functions through auto-invest, where the system allocates funds on the basis of their individual preferences. And in contrast to private credit, the minimum investment size is a lot lower, and the investor is able to diversify across a lot of different sectors, borrowers, and products.
Thanks for that. That sounds like the only way to invest in SME private credit should be through P2P lending. It's like a shameless plug there. Anyway, so let's get right into the topic today. So what is alternative data then? Sonal, could you share how it is used in SME lending and what opportunities it presents?
So alternative data is non-traditional data which is used for various purposes. And in the case of SME lending, if we look at credit assessment, it means going beyond the traditional financial statements-based approach to a more realistic approach for SMEs. if we continue to focus on traditional data, it would mean that our decisions would tend to converge to what a bank would do with the same stack of information. However, today, with the advancement in technology and everything moving online, it means richer information is captured and is available for use. And this makes alternative data more attractive as well. And this is the kind of data that we at Validus leverage to assess our SMEs.
So, Milena, from the investor point of view, could you share what sentiment or perception is in fintechs using alternative data in credit assessment then?
Sure. So I think from the perspective of Validus as an example, I think a lot of our investors have gradually gained comfort with assessing SMEs on the basis of alternative data, primarily because when you look at the bank models, they typically use static data, which is based on bank statements, historical financials, whereas some of the data that we look at is really live and based on present performance and revenue that's being generated. And so from an investor standpoint, it's like an inbuilt way that we're constantly assessing the SME's creditworthiness.
Got it. Okay. So Sonal, there has been concerns that the use of alternative data allows some borrowers who are classified as subprime by traditional criteria to be given a better loan rate, allowing them to obtain lower price credits. So what are your thoughts on that?
I think these are largely misplaced concerns, and I would attribute them to a lack of understanding perhaps of alternate data. But the key to using alternate forms of data is possibly to ensure that that data is matched to appropriate use cases. It is, the contextual usage is very important. When it comes to SMEs, as an example, these could be largely underpenetrated and in the traditional sense, data poor segments, which means their eligibility based on traditional methods would be largely unfulfilled. Which leads us to the fact that there are unexplored data sets available which can be used for the same SMEs to grant them access to credit for further growth. So as an example, it could mean for an SME, what constitutes assets would be very different for large corporates compared to for an SME. Now, it could mean that we don't have property assets for that SME, but at the same time, the business transactions, their ability to convert a tender to real work and fulfill that work is real valid information that is available to us. That is the kind of information that we can use to understand the quality and quantity of work that SME is progressing towards. And in our context, again, this is the kind of data which we would use to ensure that we can support growth-based SMEs for lending.
So in short, we are really, using alternative data will allow us to better assess SMEs on a more realistic basis, isn't it?
Right.
Okay.
Yes.
So what do you think the future of alternate data is in P2P lending then?
So I think P2P would continue to grow and would likely to be more mainstream. Today, it is looked at as an alternate stack. I think the convergence is likely to happen with banks also exploring this information, with other forms coming into play and level playing field available for all. The use of alternate data would continue to grow for assisting businesses because there is a huge untapped opportunity right there, which can benefit from this usage and can still contribute in a very healthy way to economies. The future would entail more optimal use and responsible use of this data, which would be a more transparent environment and a win-win for all.
Sure, yeah. I think as Sonal mentioned, alternative data is slowly becoming appreciated as a more mainstream way of assessing SMEs or those who might not have traditional data sources available on them. And I think on the investor side, as we at Validus are building our capabilities and the investors are seeing them take shape in both the quality and diversity of financing opportunities we're offering, they kind of build confidence over time, and they have sort of this knowledge and comfort to scale their own allocation to P2P lending as part of their portfolio, kind of in line with the growth of our own book. And I think with most of our borrower base, I think about 90% coming back to us for recurring financing needs, investors will slowly begin to see names that they're familiar with, and they're able to also watch these borrowers grow. And I think that sort of journey along with them gives them this confidence that our model is working.
Okay, thanks. I guess that wraps up a quick short summary of the topic today. I hope that helps give everyone a bit of an insight into what alternative data is and how we use it in SME lending. So if you have any questions, feel free to get in touch with us. Thanks again to Sonal and Milena for joining us today. So hopefully we'll do a next session soon too. Thanks.
Thank you.